Hey guys, welcome back to Be Rich. Today I'm joined by my uncle, and we're going to be recording another company analysis video. Of course, this time it's my other uncle, and let's see, he was who I was able to rope into filming with me for today. So, the company which we're going to be picking apart today is Panasonic Holdings Corporation. This is a company which was founded in around 1917. It's been over 100 years since Panasonic has been in business. I'm sure a lot of you might have or had Panasonic products in the past. I'm sure that air conditions, phones, TVs, Panasonic makes EV batteries, but we'll come to that. So, and they also make other lifestyle appliances. So, maybe not in India, but in other places, they also make ovens and these sort of different kitchen gadgets which we use. And there's a whole lot more of what Panasonic does. If you aren't aware, Panasonic also provides software as service, they provide supply chain management services. So there's quite a lot of things that Panasonic does in terms of its conglomerate structure and its businesses. So this is the company which we're working with today. And to start you off, I want to go through the motions of how I would go about picking a company like Panasonic and analyzing it. And then maybe we can discuss what my assumptions are, whether they're feasible, and what do you think about this idea?
I think it's
Do
a
you
great
think
idea.
Okay.
But
So
were they National Panasonic or were they just Panasonic?
this is Panasonic Holdings, which means it's the parent company for all the Panasonic subsidiaries which exist.
Cool. Understood. Yes.
Yes. So it holds all the companies under its structure. So when we look at Panasonic as a company, the first thing which we'll have to sort of look at is that Panasonic has a few key business sectors, let's say, which it works under. So the main thing, the main divisions of Panasonic, the structure of Panasonic is that you have the main holding company on top, which is Panasonic Holding Corporation. Then you have Panasonic Corporation. Then you have the lifestyle products. Then you have the electronics company, the industrial solutions company. So there's quite a lot of subsidiary companies underneath Panasonic, which we take a look at. So as of 2023, if we look at Panasonic's revenue breakdown, the living products, so basically your home appliances, stuff which we use from a daily basis, air conditioners, humidifiers, these sort of things, they account for the largest portion of Panasonic's business. It's about 38.71%. And then the second largest business comes from the automotive side. And when I say automotive side, I mean the fact that Panasonic produces lithium ion batteries. And a lot of you must be aware of Tesla. Tesla is one main company which sources their batteries predominantly from Panasonic, though it is changing today. Today, Tesla models are also trying to incorporate LG lithium ion batteries, but Panasonic is still considered the gold standard of lithium ion batteries. So, when it comes to this, we see that Panasonic's automotive branch accounts for 17.42% of their revenue. The next largest share comes from the Panasonic Connect, which is basically the supply chain management company called Blue Yonder, which they acquired, in the early part of this decade. And we also have other software as a service products which Panasonic offers. And then the next part comes in energy. They have raw material production and they have energy production. And then they also have some industrial goods which they produce for B2B, where they try to produce industrial goods and they sell it to factories and manufacturers. So that business accounts for about 10% of their revenue. So the main focus of our analysis will be centered on the living products segment as well as the automotive segment of Panasonic. So anything you want to clarify so far, or should I continue?
No, I'm ready to deep dive into this. Thanks for laying it out. I'm ready.
Yes. So first things first, let's look at the fundamentals of Panasonic. If you look at the fundamentals of Panasonic, there are a few measures which we have to look at. The first thing I want to look at is how the free cash flow of Panasonic is, because we know that Panasonic is a capital intensive business. If you're manufacturing batteries, living appliances, you're manufacturing avionic tech, this is going to be a very capital intensive business. So I want to look at their free cash flow first. And Rupesh will put the free cash flow chart on screen, and we can basically see that since 2019, around 2019, when they had about 156 billion yen in free cash flow, today their free cash flow is at about 220 billion yen. So the free cash flow hasn't increased much in the span of 2019, 2020, 2021, 22, 23. So about 5.5 years, the free cash flow hasn't increased all that much. It's only climbed from 156 to 220 billion Japanese yen. And if you look at the chart, you can see that there's a lot of variation. So the free cash flow in 2021 was only 18.66 billion Japanese yen. So basically, with Panasonic, unlike Subaru, the prediction of how their free cash flow is going to, yes, there is a general upward trend, it looks like, but it's very difficult to try to pin and figure out how much their free cash flow is actually going to grow over the next decade or so, which is our investment period, at least a minimum of a decade. So this is the first thing which we look at. And the CAGR, if you compute it from 2019 to the current free cash flow number of 220 billion yen, the free cash flow has grown at about 5% year on year, which is not bad, but at the same time, there's a lot of fluctuation. And given the EV segment, I don't know, how much capital they have to put up to continue staying competitive in the EV segment, because we have big giants like LG, which is your Korean chaebol. I don't know if I'm pronouncing that correctly, but it's a big Korean multi conglomerate. They're also in the same segments as Panasonic, and they're also making a push into the EV segment, as well as they also have a horse in the race in the living appliances segment. So companies like LG are giving massive competition to Panasonic, because LG has a greater amount of funding to be able to invest into this race. So I don't know how that's going to go. But anyway, free cash flow at about 5%. And the next thing I want to look at is the balance sheet, and I want to see how much debt and reserves Panasonic has. So if we look at the cash and short-term investments of Panasonic, it stands at 1.12 trillion yen, Japanese yen. And if you look at the total debt of Panasonic Holding Corporation, it stands at a number of 1.63 trillion yen. So they are able to make the total debt payment, that is in the sense that they'll be able to pay off their debt if they liquidate their cash and short-term investments, along with how much ever their free cash flow is. If you add that on top of that, they'll be close to wiping out their total debt. So their financial position is quite strong, is what I feel, compared to, let's say, a company like LG, which has borrowed a little bit more than what Panasonic has. So the point is that the financials don't look so bad; they look fine. But this is to do with the financials. And then if we look at their net income, the amount of money that they're making year over year, and if you look at their net income, also very variable, though it has an upward trend. But the important thing with their net income is that if you look at their income statement, you'll see that the 2023 net income has gone to 443 billion yen, but then it's fallen back this year, because the fact is that they made a one-time sale of a certain asset that they had, and that caused their net income to skyrocket. And then of course this year they don't have that one-time sale coming again, so that means that net income has come down. But in order to boost their net income, what they've done is they've taken the tax credits. So there's something known as the Inflation Reduction Act, which was passed by Joe Biden in 2022, which basically meant that for every battery that they produce in America, they get a 10% tax rebate on the cost of the battery that they're producing. So 10% of the cost is given to them as tax rebate credits. So they've stored up all these credits and they've started monetizing them in the current fiscal year. So what that has basically meant is that they're trying to pad up their net income, because they didn't want to show a huge net income decline from the previous year to this year. But that scares me a bit, because I don't know what the true story would have been. The true story might have been much worse, and you can look at income statement and you can see that. And given Trump is in office and there are huge pressures with the EV segment, because we know that Trump at some point is also seeking to reverse a lot of Joe Biden's policies. He has already passed an executive order, sometime in Jan, saying that he was going to revoke a lot of the rebates that Joe Biden passed to give consumers of EV products a tax rebate, but Trump has pulled that back, which has basically reduced the pace at which there was an electrification in the automobile segment. So as far as Panasonic's net income is concerned, I don't know how much longer they're going to be able to sustain on these tax credits which they get for producing their batteries, and I don't know for how much longer Panasonic will be able to count on a benign environment in the US. So it could very well mean that Trump wakes up one day and decides that he wants to levy a tariff on his Japanese allies. I don't know if it's going to happen, but it could happen. It's a possibility. But that being said, Panasonic has made a lot of the investments that it has to make already. So if you look at the transcript call or the earning call of Panasonic, they say that we're not too worried about tariffs and we're not too worried about Trump revoking the tax credit policy, because if he were to revoke the tax credit scheme, that would be 1 to 2 years down the line. Like if he decides it today, then the tax credits for the next 2 years would have already been accounted for. So only after the third year would the tax credit stop coming in. So, given that point, we basically see that Panasonic chief executive officer doesn't seem too worried about it, and he says that we've already made a lot of the investments that we had to make already. So the dent in the free cash flow has already been made. So he doesn't need to take more from free cash flow in order to invest to sustain earning power. So up to this point, do you have any clarifications, or should we move on to the valuation side of things?
I'm waiting for the valuation side.
Okay. So that's the thing. So all this has been a build up for the valuation. The build up for the valuation is because we need to figure out what sort of estimates we can use for our valuation. So when we look at the discounted cash flow model, I've used the same DCF valuation method, and the detailed calculations will be available on the Value Observer Substack. You can look at the Subaru piece as well, where we've done a detailed calculation. But the crux of it is this: Panasonic's free cash flow as of today is 220.52 billion Japanese yen, and I forecast it at different growth rates over the period of the next 10 years. So, given that Panasonic is in competition with LG, and given that Panasonic is in competition with another Chinese company known as BYD, BYD is another big company that's dominating the EV segment in China because they're producing the EV batteries for Chinese cars at a very, very cheap rate. And what we're basically seeing is that BYD is posing a huge competition to Panasonic, and LG, of course, as we've talked about before, is also posing a huge competition to Panasonic. So it seems to me that there is a good chance that Panasonic's free cash flow might be under fire for the upcoming decade, especially given Donald Trump being in power, and then there's talks of a recession going on. There's also talks of Donald Trump in his congressional address today, as we sit down to record this video. Early morning, I recall seeing that Donald Trump said that he has reversed a lot of the EV policies and EV push which Joe Biden had made. So we have to wait and watch and see how that's going to play out for Panasonic. But the point is, in our discounted cash flow modeling, I am not very comfortable taking a very high growth rate. But even if we do take a very high growth rate, let's look at it. So the PE ratio of Panasonic today is 13. On the look of it, it seems quite reasonable. 13 doesn't seem to be a very highly valued company. But at the same time, we have to take a look at some key important metrics. So if we look at Panasonic's discounted cash flow of $220 billion, and then let's assume an 8% growth rate on average for the next 10 years. Even if there's a Trump recession, those effects wear out in the next 3 years, whatever the negatives are. And on average, the free cash flow grows by 8%. If your free cash flow grows by 8% over the next, let's say, 10 years, free cash flow growing at 10%, you have the terminal growth rate at 2%. That is, after the 10 years, Panasonic was going to grow at 2% annually year over year. And let's say that after this, we suppose that we discount all of this at 10%. 10% is a pretty decent discount rate given the fact that Panasonic's weighted average cost of capital is about 6.8%. That is, the cost of their capital which they put in the business is 6.8%. So I feel like we should use a higher discount rate, but given the fact that 6.8% and then the Japanese interest rate is quite low still, 10% has a margin of safety of about 2%. So given the margin of safety and the discount rate of 10%, let's look at the the cash flows over the next 10 years, and then the terminal value, which is calculated. And finally, we arrive at the per share value. So when you look at the per share value, the best case scenario, in my opinion, with the free cash flow growing at 8% year on year and there being a 2% terminal growth rate, I feel, or rather, the model tells us that the per share value of the free cash flows come to 1971.17 yen per share. Today, Panasonic is trading at 1815 yen per share. So the margin of safety that you have is quite thin. And if you take, more conservative estimates, and let's say that Panasonic's free cash flow jumps around like the past 5 years it has, if you take a more conservative estimate, this number comes down even lower than the price at which it's currently at. More of these detailed calculations are available on the Substack, but the point is that today it seems like Panasonic, even at a PE ratio of 13.5, as paradoxical as it may seem, seems overvalued. What do you think about everything I've said about the valuation?
I agree with what all you're saying in terms of valuation. But if I was a long-term investor, my way to look at it would be slightly different. The way I would look at this, looking at these numbers, what I'm looking at my screen, would be this is the kind of company where you have to look at it like IBM or one of the other older legacy companies. This is a legacy company. It's not a new company. It's a very old company. And it was famously known for its electronics, Panasonic, originally as an electronics company. And then it got into all this EV batteries and all. Panasonic is also a battery company. As a value investor, the way I'll see it is if I buy this company now at this low valuations and if I hold it for 10 years, the probability of what will happen to this company 10 years or 15 years from now is it will break into chunks. The loss-making divisions will be sold off, and probably this software division you're talking about will go into an IPO. So that will become a separate company.
Yes.
And this battery division will become a separate company. So it'll all break into chunks, and as an investor, you will unlock value at that point of time. The biggest question, of course, what you said is true. What is the prospect of, Panasonic only making batteries? Is that enough? It's a, question which is very difficult to answer.
I mean, and one more thing which I'm a little bearish about is the fact that global consumption doesn't seem to be going through an uptick rate. I mean, if you look at US consumption, I don't think it's going to go up dramatically over the next 3-4 years, or at least the next 2 years. I don't think consumption is going to go up much, and I don't see a world in which Panasonic is going to make extra normal returns in their in their living products, because it's a saturated market and they're always trying to cost cut. So, there's this book, the Blue Ocean Strategy book. I feel that Panasonic is operating in red oceans where they're competing on margins and they're competing all the time on the cutting edge research and development. And like what Uncle Charlie and Uncle Warren Buffett said, that the main thing we have to look at is whether Panasonic has a moat or does it not have a moat, and whether
there is no moat.
Yeah, there seems to be no moat, because I thought that they might have had a moat because they had an exclusive tie-up with Tesla, but now Tesla is offering LG batteries because Panasonic is simply unable to meet capacity. And I actually took some time out to dig through the automobile forums. So automobile forums on the internet are very active, and you have multiple people always debating on which car is best, which battery is best. A lot of people do say that the Panasonic NCM batteries outperform the LG batteries on the curve, the charging curve, as well as the life cycle of the product. But at the same time, they say that the difference is marginal. That is, it's good quality, and LG has some quality control issues, or had some quality control issues, but it's not enough to justify say calling Panasonic's business as a moat. And I foresee that Panasonic is going to have greater capital investments to sustain their current earnings in the future, because there's simply too much competition. They won't be able to maintain margins, is what I see, unless suddenly all their competition capitulates or come upon like a huge discovery that's going to make them propel them.
No, you're right. You cannot make an investment based on some genie coming out of the bottle. There's nothing like that. We have to investment based on.
Right. You're right in the sense that Panasonic is in talks about spinning off their less profitable businesses and basically getting out of them. So if you remember, for a while there were Panasonic mobile phones until the very recent past, maybe 2018, 2019. So
they made one of the smallest ones.
Yeah, so
it used to be this big.
but they phased out of the mobile phone business, the electronics business, because the margins were too low, and they phased out of it and they went into automobiles in 2014. So 2012 they had a huge loss, and then the CEO of the group changed, and we had a new CEO who came in and transformed the business, exited the unprofitable side. So Panasonic has gone through this motion before, and again they plan to spin off their unprofitable businesses and retain their core businesses which are profitable. And like you said, they're planning to launch an
No,
IP.
the problem is not this.
Yeah,
As a value investor, as you say, you have to invest on the business and the existing moat, both of which are not there. It's like literally, it's dying slowly. Instead of dying rapidly, it's dying slowly unless until they manage to enter an industry and be very innovative and grow rapidly. And usually Japanese companies don't do that. They're very conservative. The management is very old and they're very conservative. I'm sure the management of Panasonic is also a bunch of old Japanese guys. So I'm not betting money on this. I mean, you can argue, but we don't make the kind of investments. We're not active investors where we try to get on the board and then force the board to dismantle the company. First of all, that's very difficult to do in Japan. Second of
yes,
all, we don't have the capital, nor do we have the bandwidth to do something like that. So
yeah,
it'll be a very hard no for me as a value investor for this
yeah.
company unless I can see some other argument being made. Something in the pipeline which we do not know about, which someone can shed some light on us. For us saying, no, this is there, it's coming. They're
Yeah.
doing this revolutionary new thing, and this
So
is
that's
true
the thing.
for all.
Yeah. So, in all fairness to Panasonic, they filed quite a few patents, and they're working with Toyota on building solid state batteries. Although I'm not an engineer, I don't know much about this, but they're trying
No,
to.
but that the technology is owned by Toyota.
Yes. So they're planning.
Panasonic will only help in manufacturing and other assistance, but the actual know-how,
Yeah.
the
So
patent is owned by Toyota.
So they have an R&D partnership with Toyota as well. So Toyota has a research division, and they've been plowing a bunch of cash into
No,
EV research and stuff. So they have a tie-up with Toyota. I don't know how far that's going. Like you said, I don't know if it's simply a manufacturing deal or whether Panasonic also will take a portion of some of the IP. I'm not sure about that, but the and
from what
another.
I remember reading about that, because I did research in that, because solid state battery is the future. Because if solid state batteries, if we're able to unlock it, it's like nuclear fission. I mean, we are able to unlock it to get clean energy forever and ever, that kind of idea. Because lithium batteries are unstable, they're unsafe, and once they start catching fire, it's very difficult to put them out. All that is not true with solid state. They have a much longer life cycle, and they're much safer, easy to dispose of and recycle and all that. So that is where the magic is. But it's not been, they're saying that Toyota has it. It's there. They've managed to unlock it. But they've not decided to open the floodgates and use it. They're still banking on hybrid cars. I don't know if it is true. If you have, let's say, an amazing new technology and you can capitalize it being, front runner, first mover advantage, why you wouldn't do it? But in the case of even Kodak, they had the technology for digital imaging, but Kodak sat on it and everybody else caught up and they overtook, and now Kodak is nowhere. So I do not know, maybe it is there, and I don't know why, if it is there, they're not releasing it. But
So
in
that's the
that,
yeah.
Panasonic's role in that is very small, in the sense that they're only partners in it. It's like
Yes.
all the R&D is on Toyota
Yeah.
as far as the technology of that's gone. Panasonic is offering, of course, know-how, since they've been in the battery game for a very long time.
Yeah.
And they do have a lot of know-how and history in solid-state batteries. All your small batteries are all solid-state batteries. So they do have a lot of knowledge in it. But I think whatever's been filed so far is all Toyota-owned. Unless if
So
I'm wrong, someone can comment down below on that.
so the thing with that partnership, even if nothing major comes out of it, another reason why I could think investing in Panasonic is I could consider investing in Panasonic is that in the upcoming few years it's going to be very tough for them. To be brutally honest, it's going to be very tough for them with Trump in power and the uncertainty surrounding his reign, and also the fact that Trump might not revoke the Section 47X or whatever it is in the in the Inflation Reduction Act, which is giving them all these subsidies. And if something like that happens and the market reacts to that, and Panasonic corrects by 25%, 30%, I wouldn't mind buying a few and keeping it in my portfolio and taking an experiment on it, because
Yeah, it
if
could
it,
be a moonshot bet.
yeah, because right now the valuation, I believe, is a bit too much to justify the risk that goes on with Panasonic. Because we looked at Subaru, you take the worst possible case, which is a 15% discount rate, which is not justifiable at all for a company like Subaru, and you take,
Hmm.
let's say, because the weighted average cost of capital is only around 6% of 5.5%, and you have the fact that they can cover all their debt with only their free cash flow within a year. They have a
Hmm.
presence in a niche market already there, and more than that, the fact is that their financial position is very strong. The need to invest in R&D is there, but it's not as pressing as it is for a company like Panasonic, because they're only assembling the parts. They're not the ones who are actually producing something innovative per se. They take the most innovative guy, put them in their car, and then sell it out for a premium. That's what Subaru does. And Subaru's valuation is at a P ratio of 5. That helps a lot. So
Hmm.
the point is with Panasonic that I would need to see something. I would need to see a big correction before I consider jumping into a company. Say 30% correction or something drastic like that. So what do you think?
I agree with you 100%.
Yeah.
That till that happens, there's nothing to. You can keep it on your watch list if you want. I won't even keep it on my watch list, because from whatever I've seen and read and I've understood, it's not a company, Japanese company. Yes, that's about it. I would say it's got its only thing it's got going. It's an old company. It's a Japanese company. It'll probably continue being there in some shape or form for many more years to come. But as an investor, there are much better places to put my capital than this. Is my argument.
Yes, both in India, Japan, and the US. In all three places. So yes.
Correct. Yes.
So, guys, I hope you enjoyed this company analysis. And if you do have any questions about this company analysis, feel free to leave them in the comment section below. They could be incorporated in the next company analysis. And if you have other companies you want to see on this series, do leave them in the comment section below. Finally, if you want to view the detailed calculations which we have made for this company analysis, do visit the Substack Value Observer and look at the Panasonic piece, which will be up as this video goes up. So that being said, I'd like to thank you for joining me on this video and accompanying me on this company analysis. And I'd like to thank the viewers as well. And if you have anything else to say.
No, thank you for having me.
Okay. So thanks again for watching Be Rich. Please like, subscribe, and comment, and share the video with friends and family members who might enjoy a video like this. And that being said, we hope to see you again on Be Rich.
Thank you.